The stock for Zoetis company has been in a wild ride for the last year. Overall, it has returned 26%, overperforming the S&P 500. However, just look at the wild ride it has been in. Look at the lows it hit in November 2023 and then how it rose sharply back to the $200 mark. Today we'll be looking at a company which not only has great industry trends, but also has solid management, solid fundamentals, and extremely high efficiency ratios, which we like to see. A company which is the clear market leader and has a narrow moat, I would say, which is focused on innovation and research and development. So Zoetis, the animal healthcare company. In their annual report, they identify themselves as the global leader in animal health industry, focused on medicines, vaccines, and other health products for dogs, cats, cattle, and other. 54% of the revenue comes from the USA, and the rest is spread amongst emerging economies and developed economies. They have a very interesting growth strategy, which I managed to divide it into 3 different pillars. The first one is their innovation factor. This company is hugely focused into innovation, and in the end of the day, it's a pharma company, but oriented to animals. They achieved 200 approvals in 2022, and out of those, they have 15 blockbuster products, which are currently generating over $100 million. And by blockbuster, I mean products that are global and that they have a mass appeal and a lot of demand for them. So their strategy here is to keep innovating, keep developing other products and treatments for the animals, and just keep being the leader in this industry. Then they're also focusing on enhancing customer experience. Clinic revenues and spend per visit have been growing steadily throughout the years, and this is a trend that they want to maintain. And finally, digital solutions. They're a company which is leveraging all digital in order to increase their competitive advantage. For example, they are creating products based on genetics of the different animals and even on improving and tracking the analytics of the quality of life of cattle. And additionally, for internal use, they are using predictive analytics for sales forecasting. Their financial analysis is where this company shines. They have a best-in-class 19% return on capital employed, which is very difficult to obtain in an industry like that. And they have a very solid interest coverage ratio of 12 times. What this means is that they're able to pay their interest payments right now over 12 times with the current EBITDA that they are generating. And this is good because it gives them kind of a safety cushion in case interest rates go up or in case their EBITDA goes down. They have a good cash conversion of 67%. We generally like to see this number higher up, around the 90%, but it's good because it shows that this company still has room for improvement and its management is currently showing that they are trying to tackle this problem. In terms of profit margins, they have close to 70% profit margin and a 35% operating margin, which is excellent and of course above of the operating margin that its peers have. Their revenue, their gross profit, and their net income have been increasing year after year, and their margins are extremely stable since 2018. You can see that their gross margin has been steady at around 70%, and of course, the net margin close to 30% for 5 consecutive years. And since the revenues are growing steadily, their net margin and more importantly, their free cash flows are doing so as well. Their efficiency ratios have been extremely stable throughout the years. The only misleading one is the return on equity, which shows that it is around 50%. However, this company is very leveraged and they have more liabilities than equities. So I would rather look at return on invested capital, which is extremely solid as well at around 25%, which is something that is very difficult to see on very big companies. So this is another plus for the company. In terms of fundamental analysis, to me, it ticks all the boxes. I gave them a very good 8 out of 8, as first of all, they have low liability risk with a 12% interest coverage ratio. They have an extremely solid balance sheet. For example, their current assets cover all of their current liabilities, and the trends have been showing the current ratio to be improving. In terms of cash flow consistency, this company is king at doing that since the majority of their clients are repeat clients. And for example, when you have a dog and you're taking him to a clinic or to the vet, you normally go to the same one. So the number of repeat customers in this business is very, very high. In terms of organic revenue growth, we have seen that they don't have an issue growing their revenue year after year, and organic free cash flow growth, the same thing. Since their margins are extremely steady and their revenue is increasing, well, their free cash flow is managing to increase as well, especially since this business has very low capex. Zoetis has an existing moat and a competitive advantage since it is the leader in the industry and it has various patents covering its best-selling products, or as we called it in one of the previous slides, its blockbuster products. They then, of course, have a very consistent dividend, which has been increasing year after year. And of course, they conduct share buybacks, so they tick all the boxes. The dividends have increased every single quarter since 2019, but well, since earlier times, we just have the data until 2019. Their dividends per share have been growing, the amount paid has been going, and the yield in October 31st, 2023 was as high as it has ever been. However, remember that in October 31st, 2023, this company had a huge dip, and since then the price has increased tremendously, so the yield right now would be a lot closer to that 0.5% mark, which would consider the stock to be expensively priced at the current moment. In terms of long-term analysis, and in terms of cattle, there are more regulations now than ever on the fact that cattle should be correctly treated so that there are no diseases for the final customers. In terms of growth potential, I see two main avenues for this company. The first one being one thing that they're already doing extremely well, which is product development. They cleared 200 new products in 2022, as we saw previously, so that means that they're investing heavily into R&D to develop new products, which is something that as an investor you would love to see, since they can do this with minimal capex. And the second avenue for growth would be to increase their unitary revenues. How? Well, we can see by the previously stated trend that clinics are now growing more than ever, and the spend at clinics is also growing at a very steady pace. And of course, by following the secular trend that people are now spending more than ever on their animals, I believe that this will continue in the long term and this will increase their unitary revenues. So Zoetis is right now trading at a 40 PE ratio, which to me looks like a very expensive PE ratio or PE multiple for this company at the current moment. Additionally, by using the free cash flow from 2022, the yield comes out at 1.64%, which when compared against the long-term inflation rate of 3%, comes out as the company is not attractively priced and that it is very expensive in comparison to the free cash flows that it is generating. Of course, this is because this company trades at a huge premium since it's a very good company with solid fundamentals, as we have seen, but I think we can wait for a pullback before buying the stock. And seeing the wild ride that 2023 was for Zoetis stock, I do believe that the price will decline in the near future. I don't see many risks and possible challenges for this company. I think the main one is competitor due to the fact that this industry is very, very profitable, and there are a lot of companies that will try to innovate, create new products, and take market share from Zoetis. In terms of regulation, I don't see any bad regulations affecting the company, and in terms of performance, since it is extremely consistent at generating revenues, free cash flows, and income due to the majority of their clients being repeat customers, I don't see this being a possible risk. And of course, in terms of market, nobody's going to reduce their spend on healthcare for animals if the economy is in a downturn, because the regulations will apply and you would want to keep your pet safe. Before we move into this, remember, I'm not a financial advisor and this is not financial advice, so please do your research before investing in the company. But I believe Zoetis has a strong competitive advantage. It provides consistent cash flows which are predictable and resilient, and it has a very high return on capital employed, which means that it is great at creating value for the investor. So I believe that this is a good company and it will possibly be a good investment. However, for myself, I will put it on my watch list and I will buy it when I see a dip. Remember that if you want to see my buys, there is a link in Patreon for you down here and it's totally free. So thank you for watching. As always, this has been the Cashflow Compounder. Join the free Patreon for extra content, and there is a link in bio for a free stock if you join Trader Republic or Trading 212.